Hello everyone, welcome to Yadnya Investment Academy. Today we are going to do a mutual fund review. Let me first explain the methodology of the review. We will list and review the fund on various parameters and rate each parameter by green, yellow or red star. Green star means good performance, yellow star means average performance and red means below average performance. In the end, based on the total number of green, yellow and red star respectively, you can take a call to buy this fund or not. Please remember all the fund parameters we are going to discuss here are based on 1st March 2017 data as reference. In this video, we are going to review fund name DSP BlackRock Tax Saver Fund. Before going into review, let's understand about fund's objectives. The fund invests primarily in equities and equity related instruments. Fund invests in diversified equity portfolio and has a large cap bias with about 75% allocation in them. It enables investors to avail tax deduction from total income as permitted under Section 80C of Income Tax Act. Now let's start the detailed review on each parameter. First, the fund belongs to DSP BlackRock fund house family, which is currently India's 9th biggest fund house in terms of asset under management, out of more than 45 fund houses existing in India. It was established more than 19 years ago. So your fund is in good and safe hands of an experienced and well-established fund house. So let's give a green star here. Tax Saver Fund was launched in Jan 2007, which means it is active for more than 10 years now and has seen all ups and downs in market cycles. So let's give a green star here too for being an experienced fund. Fund is categorized in ELSS category as it gives Section 80C tax deductions for investing and has a 3-year lock-in. Now moving to next, this fund has a asset under management that is AUM of more than 1725 crore and is the 9th biggest ELSS fund. This shows investors' trust in the fund and stability of the fund, so deserves a green star here too. Now let's talk about the moolah, that is the returns. We will first talk about the trailing returns from 1st March and then talk about calendar returns. In trailing returns, we can see the fund has given extraordinary returns and consistently and handsomely beaten its benchmark, that is NSE 500, and has also beaten the category average returns consistently across 1 year, 3 year, 5 year and 10 year period. This according to us is excellent performance given the fund's tilt towards conservative large cap companies and being compared in ELSS category, which has more aggressive funds as well with much larger mid and small cap bias. Now looking at the calendarized returns of last 9 years, which means returns from 1st Jan to 31st December of the calendar year, we see that there has been no instance when fund was beaten by both benchmark and category. It couldn't beat benchmark returns but beat the category returns in 2009 and has beaten benchmark returns but not the category returns 2 times, that is in 2008 and 2012. In this, difference was minuscule in 2008, that is less than 0.5%, so we will remove that from the comparison here. And fund has beaten both category and benchmark 6 times in last 9 years. So we believe this is a very good performance from returns perspective and therefore we will give them 2 green stars for it. Next important parameter is fund manager. Tax Saver has got a new fund manager in July 2015, Rohit Singhania. This is the 3rd fund manager change in its 10-year fund history. Rohit is a BCom and MBA grad and joined the fund house in 2005, so is a long timer in the DSP mutual fund. Rohit also leads DSP BlackRock Tiger Fund, which is an infrastructure fund since 2010, and this fund is one of the biggest infrastructure fund and has performed well in its sector category. Rohit has also started managing DSP BlackRock Opportunities Fund since June 2015. Both Opportunities Fund and Tax Saver Fund has given very good returns since joining of Rohit, but it is difficult to rate the performance with such short time frame. So looking at fund manager's limited fund management experience but decent recent performances and his stability in the fund house, we will give a yellow star on this parameter. Next parameter is top stock holdings of the fund and understanding the fund diversification. As on 1st March, fund has 68 stocks in this portfolio with top 5 contributing less than 20%. Cash allocation is also less than 5%. This proves very well diversified portfolio with biggest stock just has 4.4% share, and hence we give this parameter a green star too. Next parameter is sector diversification. Fund's top 3 sectors has weightage of more than 45% and is definitely overweight on financial sector with more than 25% allocation. This overweight allocation is in line with its benchmark Nifty 500, which also has a similar weightage to top 3 sectors. So for this overweight allocation, we give them a yellow star on this parameter. Next are expenses. Expense ratio of this fund is 2.56%, which is an average expense ratio range of ELSS funds. So we give yellow star to this. Now those who like numbers, let's discuss few important ratios too. Standard deviation, a measure of volatility and risk, is more than the benchmark and category, which means it takes higher risk than both. Beta 2 is a measure of risk and is again higher than the category. Alpha, which measures the risk adjusted returns, so 10.7 alpha means it can perform 10.7% better than benchmark. So on expected lines, since it is taking higher risk, it has a higher return profile with alpha higher than the category. Last is P ratio of the portfolio, which is 20 as compared to benchmark Nifty's 26.7, and which shows much better return expectation than benchmark. Ratios prove that by taking little extra risk, the fund has very good return profile as well compared to others, and therefore deserves a green star. Few other important info to note about the fund is that it is majorly a large cap oriented fund with 75% allocation to it, and this table shows how rupees 10,000 SIP would have performed in various time frames and prove the exceptional performance this fund has given continuously. So if we calculate, we got total 7 green stars and only 3 yellow stars and no red star, with new fund manager being the biggest concern for this fund. This shows how good this fund is on various parameters. To summarize, DSP BlackRock Tax Saver is a conservative fund in the ELSS category. This fund has outperformed its benchmark in 8 out of 9 calendar years since launch and its peers in 7 of those years. The fund isn't wedded to any particular style and follows a diversified approach to select stocks. The fund has been quite large cap stock oriented in the last 5 years with current allocation of 75%. The fund has got a new fund manager from July 2015. Despite the change, the fund's broader investment strategy remains largely unchanged. In fact, Rohit runs this fund in line with its investment mandate, which allows him to adopt a fluid investment approach without any bias or restrictions in terms of stocks or sectors. The absence of any defined method means investments are also made on a somewhat intuitive basis. Hence, it must be noted that the success of investment process largely depends on Rohit's execution skills. Although he has been in control of the investment process thus far, it's a short time frame to build conviction. This is all we have on this fund review. If you have any question, please do write in the comment section below. Have a great day ahead.